One of the things that, the next level you go to on these deals would be for us to build out an IRR model that tracked when's your refi, when are you getting the money back, what's all, your inflows and outflows per period.
Right now, what we are finding is there's a lot of people with investment capital looking to move into multis now, or even just commercial in general. And so the challenge is when you're looking at kind of like a cash on cash, the way we're running it is very lean.
Yeah, it's almost a completely different sheet to talk about the investment, because you can look at, okay, you get into, the nitty gritty of, we're going to do a 5-year loan, right? We want this to be a 5-year play. So in 5 years from now,
sell it.
What's our IRR? Well, the loan comes due. We want to be in a position to either sell or refi again or just renew.
And I don't think that would be the scenario, because 5 years I think is way too volatile. 10 years,
Correct.
I think we ran this. 10 years, we don't have historical data to, at least nominally, your value hasn't gone up in 10 years.
Yeah.
Right.
Yeah. Welcome back to REI Hot Seat. Andrew Hines here with David Hulshof and Jacob Campagnaro.
Hello, hello.
Hello.
Welcome back, guys. 2 weeks in a row. We're on a roll.
We are crushing it. Thank you. Yeah, thank you for having us again.
Yeah, so let's dig into what looks like a purpose-built somethingplex in St. Thomas.
Yeah, this is a very interesting one. So, on MLS, as I'm sure you can see, it is a power of sale. The entire building, from what we understand, is fully renovated. Doesn't have appliances and does have a boiler.
It's a power of sale?
Power of sale.
You don't see multifamilies come up in power of sales very often, do you?
More so these days.
Yeah. But you typically don't see them when the entire building is fully renovated and it's fully vacant.
How?
Look at the quality of this thing.
Yeah.
Look at the renos here. Hold on. Nice quality renos.
Yeah, it looks
Every
nice
unit
and clean.
is like that.
Oh, yeah, those are nice quartz countertops.
It's nicely done. Yeah. Roof is brand new. Hold on. That's a picture here.
Wow, look at that.
Sexy
No
roof.
ponding or
No
ponding.
ponding. Yeah. Oh, wait. A little bit of ponding.
Rainy day, not rainy day.
Kidding. Yeah, pond. So, however, I will note, you'll see, I don't know what happened, but there were appliances. This was a heat pump, presumably. It looks like it's gone. So
Maybe the person who sold it was on a seller financed heat
they
pump.
took them back, yeah. So, anyways, the par for the course with power of sale, we don't have all the information, but what we do have, we can run numbers on. So, ask price
Dave, just before we dive into that, location, area,
absolutely stellar.
Yeah, what do you?
So here, let me.
Because I'm familiar with this building. We had an offer on this building. I did prior to it getting sold and then renovated. So I'm very familiar with it.
You know it well.
Yeah.
So right across from, great question, across from the hospital, as you can see from this beautiful photo if you're watching us.
I feel like I sort of know this area. This is St. Thomas, right?
Yeah.
Yeah. They're, back when I saw it before, there was the potential to add units to the side. I don't know if that's the case or not, but we did not add that into the numbers.
Yeah.
Those look like nice new windows too.
Yeah, I don't believe there's much to do, if anything, other than add appliances.
And what would the process look like in a power of sale? Like, is it different? Are they going to let you do a straight CMHC kind of offer with them? I mean, I guess you can't do a straight to CMHC with a vacant building.
And I've sold a number of power sale buildings, so I'll comment on that. So the process it's interesting. So you normally have to be on MLS. I think you have to be on MLS. Period.
I think that's a legality.
Yeah, it's a legality. So there's a lot of things that the bank or the lender, or whoever's power selling the property, has to do to mitigate damages, because they
have to get as much as they can for the seller.
Right. They have to appropriately market the property and have appropriate days on market. So a lot of the times what they'll do is they will go to MLS, they will hold bid dates, and they do that for the purpose of making sure it has proper exposure, right? I don't know exactly what the language is, but usually it's 30 or 60 or 90 days.
Yep.
And the bank will pick, they'll say, we want a 30-day hold, and then we're going to do a bid.
Do 30-day hold on
They can do 30, they can do 90. Like, how long is this one, do you know?
So this one's unique in that it's actually next week, Thursday.
Okay.
But typically, to your point, it is 30 or 60 days.
So, and are they expecting a clean, firm offer at that point?
Well, so and I'll just finish my comment, and then
please.
Dave, I'd love to hear from you. But and then usually what they do, Andrew, is they'll attach a schedule, and that schedule is going to dictate what they're looking for, more or less. So usually it's 1 page, 8 pages, 9 pages, whatever. But it will talk about, the property sold as is, where is, right? The seller has no reps or warranties over the property. They're not going to guarantee anything. So any of the typical stuff you'd see in an offer, which is you represent the chattels and fixtures are in good working order. They're just going to cross that out. It's null and void, actually, because that schedule supersedes the remainder of the offer.
Yeah.
Okay.
And so usually they'll allow you to do due diligence because they don't want to get in a lawsuit forcing you to buy a contaminated property or a property that's got structural issue. So they'll give you the timelines normally, right? 30 days due diligence, but they're not looking for long drawn out process, right? They don't want to do straight to CMHC because them holding it that long, they're not getting their mortgage paid. Right? They want a quick deal. So usually how you win these things is you can be a little bit flexible on price point, but they want it quick. Yeah. Right? So if you can bring a cash offer or a quick offer, that's how you win.
I imagine they need to be prepared for audit on their process, though, if it ever came into question. Why did you pick offer B over offer A when offer A was more, but further out in closing?
Yeah. And that's it, being on the buy side of this transaction. You're trying to arm them with as much as you possibly can. Who the buyer is, proof of funds, the fact we've done this before, right?
So that they have a defensible case as well.
Like, here's the reason we chose them. I mean, you've sold a number of them, right? The reality is you need to put them in a position where they feel very safe to go with you. And the other thing too is when you're in the schedules, there's always basically wording that says if the person who is in default comes forward with the money up until the day of close, you don't have a deal, which is hard for some people to wrap their head around, right? So the subset of buyers for this is not everybody. It's truly kind of the sophisticated groups that have done it or know.
Yeah, and that's the challenge. Like, that's the challenge with offering on power of sales is you can't, like, selling them. I've known we got offers where it's just a random offer shows up and it's like, what? Like you have to be, the biggest thing for a power of sales is assurance of closure, right? Is this group actually going to close, right? If I give them the time, are they going to close, right? If it's $50,000 here or there, up or down, does that really matter in the grand scheme of things? We're getting our mortgage paid out and there's still a little bit left for the seller. That's what matters, but it's who's closing.
Point, somebody comes with a big, strong offer, and it's the Mickey Mouse Club, and they're going to, wait 30 days, and then 30 days comes, they want a haircut, the deal doesn't close. As the listing agent, you can get sued for that. You probably should have known better, right? You shouldn't have gone with them. You should have gone with this group. So that's why how you structure these is important, and that's why going through it, there's an immense amount of assumptions, because as the listing agent, they're not going to say, they never give the environmental. They never give you the appraisal, right? They're just not in a position to do that because they're not making no reps and warranties. So if you want to do it, go do it, Andrew, but we're not going to provide anything. And in fact, in a lot of cases, they'll just give you the rent roll and wish you all the best.
Yeah, they just want to, the bank wants to be careful not to represent too much, right? And that's even the lack of paperwork and the lack of documents they give you is because, like, they just don't want that to be an assumed rep and warranty that here's the rent roll. Oh, so this is the accurate rent roll then. It's like, whoa, well.
Careful now.
So they're very like, hey, do your own stuff. We're here. We're selling the property, which is quite nice. Like, I wish all sellers would do that when they're selling, right? And like, I know a lot of when you get into the bigger portfolios, they sell them as is, where is, right? They're not going to rep and warranty the 500 fridges work. What happens if one breaks, right?
It does make the process a little easier because it's a little bit fair. You're all working off very sparse data. So for the sake of time, we'll go through. So list price $4.3 million.
So 23 units at $429 is what they're listing it at.
Yep. So here's the rub. They're all vacant. The market shows 1650 is probably doable. I think that there's a few concessions. The rental market, as everybody listening knows, is cooling. Additionally, I think there's some challenges around trying to rent 23 units out of the gates. So
like the absorption in the market.
Yeah.
How fast can you rent 23 units?
Yeah, and then we can get into nuanced discussions. Do you want Airbnb some of these across from the hospital? There's a lot of cool things we can do.
Furnished rental might be a nice play
it's a
here
sexy
on
play.
a couple units.
I'm confident it would work for the sake of just a discussion.
I've heard such great things about doing that. I had one person come on my podcast a while back and talk about doing furnished rentals, midterm rentals, not Airbnb, and just absolutely crushing with it.
Especially
just where do you list that? Do you list that on, like, is that on Facebook? Is it listed on?
I think you go all platforms. Like, the nice thing about a midterm rental that's furnished, you can still put that on MLS with a realtor, right? Like, that's okay. You're just saying, hey, I'm looking for 6 months. You can say it's up to a year. Yeah. Right? Looking for rentals up to, if you want to pay my price for the furnished rental, hey, stay for 10 years.
The furnishings they changed the game entirely because there's just so few of those, to my knowledge, out there. Like, and most people don't want to deal with that. They don't want to have the risk of their furniture being damaged. They just clear out the apartment. You furnish it yourself. But that obviously doesn't work for those traveling, working people who are either going to take an Airbnb and pay a lot of money, or they could take your midterm rental.
Yeah. Think about visiting doctors, even people that have family in the hospital, right? Somewhere to stay.
I know in the bigger cities, Toronto, Vancouver, like, it's popular to have those, and I know people that just have one for when they're in town. Right. And they don't have to worry about furniture. They don't have to worry about cutlery, forks, bowls, whatever. It's just you walk in, turn the door, and you're there.
Yeah.
And so
so we, look, I took 100 off of what I felt was market. Is that accurate, guys? I don't know. We need to do a deeper dive. But for the sake of numbers, we put 1550. They're all one bids. I'm not sure of the layouts on all of them. Laundry, we did 25 per, especially based on our discussion last week. I put no spots for parking. We can definitely tighten this up. No storage. Expenses we have. Some of these are probably accurate. Some of these might be best guesstimates for the sake of our chat. So this is...
What's your taxes figure there?
31.
31, okay.
Might be a little bit higher now, but it's 31. So the way you got to do this deal, you brought it up earlier, this isn't a direct to CMHC deal. You have way too many vacancies. So power of sale to begin with, and then additionally, it's going to be somebody that's got to have the capital to get this to close, whether that's in a bridge, tenant these units. So get the appliances in, right? Put all the taps and fixtures on that need to go in. Boiler needs to go in, tenant them. And go.
It does need a boiler, you said?
Needs a boiler, yeah.
Oh, okay.
I think it's got all the work to it, just the actual boiler itself.
So you're looking at like $100,000 at least.
Is that what that is?
No, not. I'm saying that in the appliances. No, the boiler on its own.
I was like, wow, how much are boilers?
Boilers should be what, like $15,000 or something like that.
So 20 more, 20 to 30.
With the actual boiler itself?
With the boiler.
Let's change this then. Let's just put a boiler line item here.
And it also depends what kind of boiler you're going with. High end, high efficiency, right?
Well, I don't feel like you can get away with
another building.
Can you even put in a non-high efficiency anymore?
So we appliances. I did 4,000 a unit. Install those appliances. I'm just guessing here, guys, for number's sake. 46,000. I did 3 months of carry. Right, because we got to tenant this up.
Yep. It's obviously not clean like that. You're going to rent some, and then others are going to go longer.
Right. So it's just a fail safe. Now we've got a 20K boiler. So this process, that sheet that we're looking at right now, is us going, doing the work, tenanting, and then bringing it to CMHC. And the nice thing, if we do that bridge situation, is we can effectively strip out as much capital as the loan will allow. So what we're looking at here is how much money are we going to leave in this deal? That's the goal here. Does that make sense?
And do you think there's an opportunity to get everything out?
No. But I don't think you need to on a deal like this. So Jake and I did a little deep dive into rates. Mm-hmm. So what do we 70, 80 bips off of spread on a 10-year?
75 bips, I think, on a 10.
We happen to have...
What was the 5-year again? Do you remember?
5 years, just under 3. It's right here. I don't know. It's probably too small for people to see. And then the 10-year is 3.7. 3.37. Dyslexia there. So let's put 4.1. Let's just zoom out for a quick moment. 85% loan to value. Okay. So... have those costs in. We're able to get to a value I put of, on a 5.5 cap on exit, that's about a $5.3 million value. That's $228 a door. This
okay,
is
and you
finance
came in, asking is 4.2.
Yeah. So we got to also equate for the capital needed to get it there, right? So if we go backwards here.
So how do you feel about the pricing on it then?
I think I got to be careful because I'm going to be bringing offers to this thing, but I don't think they're too far off.
Yeah.
Be curious to see where this is a great litmus test. I think they priced it appropriately. Is it a little bit high or a little bit low? We'll see, because the vacancy and the units being done and St. Thomas, but power of sale. So I think you're close. So if we go back to the stabilized refi, we're leaving about 370 in the deal.
Yeah. And do you have the number, like what cash on return would be in that scenario? Like if that's what's left in the deal?
Yeah. So if we kind of go through the expenses, taxes, property management, all those beautiful things everybody's familiar with, we're cash flowing about $46,000 a year on a loan of $4.6 million loan. So cash on cash would be that divided by the money we left in the deal.
Yeah.
So 12.
12%.
12.8.
Not bad. You know,
pretty
one of the things that, the next level you go to on these deals would be for us to build out an IRR model that tracked when's your refi, when are you getting the money back, what's all, your inflows and outflows per period to get that true return, which, do you really need to do that? The only time you really need to do that, I guess, is if you're pitching investors, going to an EMD or stuff like that.
Well, right now, what we are finding is there's a lot of people with investment capital looking to move into multis now, or even just commercial in general. And so the challenge is when you're looking at kind of like a cash on cash, the way we're running it is very lean. Like we're quite conservative. We're not building in mortgage pay down, appreciation, things like that. Yep. So it's hard to do a dollar comparison because, again, this is just a filter to see what deals we like, right?
Yeah. Yeah, it's almost a completely different sheet to talk about the investment, because you can look at, okay, you get into, the nitty gritty of, we're going to do a 5-year loan, right? We want this to be a 5-year play. So in 5 years from now,
sell it.
What's our IR? Well, the loan comes due. We want to be in a position to either sell or refi again or just renew.
And I don't think that would be the scenario, because 5 years I think is way too volatile. 10 years,
correct.
I think we ran this. 10 years, we don't have historical data to, at least nominally, your value hasn't gone up in 10 years.
Yeah.
Yeah.
Except for 1990.
No, even then.
we did the old index chart.
Even then, the values were backed by
no, I was just joking.
Right?
But look, I mean, the reality is the big guys, right?
Yeah.
They're buying larger buildings, so there's more economy of scale. But their timeline is so much larger than most. That's why they're paying the prices they're paying. They pay way more on a per dollar basis, per door, and a cap rate basis than an investor at 23 units. It's because their timeline is 100 years.
Yeah.
So if you can start zooming your timeline out, it's very hard to
you're
miss.
Okay.
As long as you don't buy garbage.
Yeah, and that's the thing, right? It's nice to know as an investor, as a client, what is your timeline on this thing? Is it for your kids? Because if it's for your kids, we can. I would rather be looking in Burlington. You know what I mean? And pay a premium for Burlington. And you know what? The first 5 years, it's not cash flowing great. But in the 30 years you're going to hold it, the 40, the 50 years you're going to, it's a good investment, right? Yep. So it's really like, that's the conversation I try to have with investors or clients, because sometimes they don't get their head around that. Right? Yes. It's like, zoom out. Let's look at this as an investment rather than just buying a building and saying,
important. What are we trying to accomplish with this? And then you build around it. And if you're going to own it for multi-generations, buy in key markets.
And if you're buying for cash flow,
don't go to Toronto.
Sell you a business. We're
kind of going. We're out of that age where real estate is your active income, unless you're like a contractor or you're doing something in business. It's not the age where you can just flip and just anybody can flip and make all this money, because now the market's just not going up 5% a year, 10% a year. When it was, a lot of non-sophisticated people were making a lot of money, and now we're just not in that age. Like now it's. Real estate is back to being an investment, not an income source, not a primary income.
Yeah.
And you've seen deals pull back so much that we do see incredible cash flow on deals that still have upside to them.
Yeah.
This deal a long time ago, it would be unheard of, but now you can go buy it. You don't have that many variables, and away you go to leaving a marginal amount of money into this deal. I mean, you're cash flowing on our numbers $46,000 a year, and you have 360.
Yeah, once the 360 is in it, then you're at a position where you're gonna, your return's a lot better than 12. You're gonna be 20 plus likely, just factoring in mortgage pay down.
Right, your mortgage is $236,000 a year. Right,
$236,000 a year paid, and if you had the chart, you could calculate what's the pay down in a year. And
but even if it's 40%, 50% of it, it's just a staggering number.
Yeah, your return's going to start looking a lot better,
and it's already 13% cash on cash. So this is an exciting deal. There's a lot to it, and it's a barrier to entry is you have to be comfortable with the power of sale, right? You don't have to go firm, but if you want a chance of buying this deal, you can't be doing.
You got to have capital to put all the appliances back in.
You got to have
and
capital.
You have to have carry cost.
Right. So it's not somebody who's not well capitalized, but somebody who has the money to do this. This is an incredible opportunity and a great location. The stuff that's coming out now, more and more, it's like
a lot of good deals.
I'm like,
well, this is a perfect example of a deal wouldn't have hit the market in good times, or if it did, it wouldn't have been at a price that would have made sense.
Mm-hmm.
No, it's the fun stuff is out there now. So,
we were just talking off camera about what a fun age it is.
Right,
different rabbit holes we'll go down, but
AI and tech.
Yeah, AI, business opportunities, like automation in business. It's just
it's honestly it's so much that it's like you have to slow down and kind of pick your targets.
Yeah.
There's just so much going on. It's a wild time.
Well, we talked about it. I just put the blinders on right now.
Just sell buildings. Yeah. That's Jake and I's promise. Although we did make a commitment that we wouldn't be buying because we want to be just solely focused on this. I got to tell you, I'm struggling. I'm getting close.
Go buy.
I have permission now? Yeah.
Go for it.
Okay. I'm getting close.
All right. All right, guys, if you made it this far in the episode, please take a moment and show us some love, of course. Maybe send this episode to somebody you think could help. We'd love that. And then, of course, if you want to be on the insiders list where you'll get access to Dave, Jake, and the team, you're going to get access to off-market deals that they have come through their office. Make sure that you take a moment to add yourself to the Insiders Club for REI Hot Seat. It's in the show notes for the podcast listeners, and it's in the description below this video on YouTube. So anything else to add, guys? That's good.
No, that was awesome.
Good.
Perfect.
Appreciate it. Thank you.
Hey, guys. We'll see you again next week.